let's have a look now at another very good retracement pattern called the bat pattern. And this example we're looking at a bullish bat pattern. This pattern was discovered by Scott Carney, and here again, give credit where credit is due. He's got some very good books out if you're interested in reading up on harmonic patterns that I would recommend. In this example here again, I do not trade any of the patterns unless they found a key levels of support or resistance. In this case, we're looking at a bullish bat found at a key support zone on the daily or 4-hour chart. As with the God, we have a drive down into our key level, picking up orders. Once the orders come in, we like to see a rally up off the level, and we label that initial thrust X to A. We're then looking for a retracement, and the retracements can be anywhere from 38 to 50%, or just before, sort of in between the 50 and 62 or 618 retracement. That's of the XA leg. So initial thrust off the level, you label that X to A. On the retracement, we're looking at anywhere from 38 to 50 retracement. We're then looking for a move up, or a retracement of the A B swing. You can see we've labeled this B. So we're looking for that retracement, having a run at the A. Here again, it cannot take out the A. If price rallies up from point B and takes out A, the pattern is invalid. So it has to stay within the retracements of the A-B swing. And this retracement can be anywhere from a 38 retracement to an 886 retracement. What we're looking for now is a drive deeper. So as with the Gartley, we're looking for that retracement to the 79 retracement or 786. With the bat pattern, we're looking for a drive even deeper. So we're sort of coming right down into that double bottom, having a go at the lows of the X point, and the extensions from the A, B leg or BC, depending on how you draw it, anywhere from the 1618 to 2618 extension. And the retracement, as with the God, remember the God, it was a 786 retracement. On the bat pattern, we're looking at the 886 retracement. So not very well known fib number or fib retracement number, but very powerful. And this highlighted area is where we're looking to place the buy limit order. And the way I like to trade this is put a stop loss just below point X. So we're looking for a move at this point D point. We're looking for a rally to the upside. So recap, once again, we've identified a key support area from the higher time frame daily 4-hour chart. These patterns can be found anywhere from a 5-minute up to a 4-hour chart. We have the initial surge down. We label this initial rally after we hit this key area X to A. On the retracement side, we're looking at a 38 to 50 retracement. We then have a run up towards point A. It cannot exceed point A, anywhere from 38 to 886 retracement. We then have a drive down. And here again, the confluence, we're looking at a retracement of the XA swing, as with the Gartley, except we're now looking at the 886 retracement with a 1618 to 2618 extension. And it's at point D, we're looking to buy. The way I like to trade this, limit order at the 886, stop loss goes below point X, looking for a move to the upside.